If you thought Bitcoin's run to 120K was the top of the cycle, you are wrong. The most dangerous part of the cycle is yet to come, and it is what I'm calling Wave 5. The reflexivity blow-off top is still to come. In this video, I'll break down why Wave 5 isn't just speculation, but in fact is the direct result of our liquidity extension cycle thesis. This cycle has already outstretched longer and higher than the previous 4-year model ever did. And yet liquidity still hasn't peaked yet. And when liquidity finally flows, Wave 5 will ignite, but it won't last forever. Here's the proof. Every Bitcoin cycle prior to this one ended in a liquidity crescendo. However, this year, liquidity didn't crash out when it was supposed to. Why? Because ETF flows, regulatory clarity, and fiscal dominance have expanded. This is a key pillar in our commodity to money cycle thesis, where markets bend around capital flows. So why a fifth wave? Why not crash now? Top is in, 60K, here we come. Because the Genius Act, easing financial conditions around the globe, and US rate cuts on the horizon. All of these factors and even more are contributing to this cycle extension. So the Genius Act just signed into law about a month ago. And basically, this gave regulatory clarity for stablecoin adoption, usage, and companies in the United States. However, there's a caveat. The stablecoins must be backed by treasury bills. But what we need to understand about stablecoins is that in order to absorb all these new treasury bills, their supply needs to grow. The second order effect of the stablecoin supply growth is the growth of Bitcoin and in turn the entire crypto ecosystem, guys. So the US needs stablecoins to grow. In turn, they will grow Bitcoin. And here we can see that stablecoin companies are now among the top 10 holders in the world of US Treasuries. Top 10 global holders of US Treasuries. Stablecoins. Top 10. We're talking in league with China, Japan, Europe, and the Federal Reserve Central Bank of the United States. Guys, this ecosystem is just beginning. It's a 15-year-old ecosystem and already hold more treasuries than 90% of the countries in the world. When stablecoins grow, Bitcoin grows. So you may be wondering why this Genius Act got passed this year of all years. Well, for one, the administration is a little on the wild side this year. However, the US has roughly $10 trillion to roll this year alone. Now, about 9 trillion of that is rollovers from previous years. However, a good 1 to 2 trillion of that is a new issuance. And a good portion of this is going to be soaked up by stablecoins because of the Genius Act and because stablecoins need to be backed one-to-one with US treasuries. What better place to put them than stablecoins? In your pensions, in your retirement funds, 401ks, your nephew's Phantom wallet, my Phantom wallet. US treasuries are going to be stuffed into crypto to help the government finance their debt. Another point to support this extension thesis, this Wave 5 idea that I've conjured up, is going to be global easing conditions. Now, if you guys have been living under a rock for the last year or just out of tune with macro in general, China has been easing for about the last year. Whether that's active liquidity injections, lowering rates, and other various back-end mechanics to help supply liquidity to the market, whatever it is, they're doing it. And here we have a composite of the Chinese banks' balance sheets, and what we can see, infinite growth, guys. So this mechanic, when balance sheets expand, it's essentially the banks buying assets to hold on their balance sheet. So it's a transaction. They get assets and the cash goes into the economy. Okay? And so with this chart, infinite cash, money printer, money guns. I'm not too sure what happened with the picture, but that's our boy, Jerome Powell. He went somewhere in the States last week to give a press conference. And the tone of it, the undertone was very dovish. What the fuck does that mean? There's potential, high probability for a U.S. rate cut in September, guys. The U.S. current rate, 4.5%. Imminent rate cuts are coming. That is like the biggest green flag for the rest of the globe to either continue or actively begin easing, injecting liquidity, jump-starting their economy, get the cash flow going. Now, China's been moving on its own. That's fair. They can do what they want. However, a good chunk of the world requires the U.S. to move first. When the rates are cut, liquidity will flow, inflation will rise, and hard, scarce assets will thrive, guys. These are three major contributors as to why I think we have one more blow off the top, send everything to the moon wave left in the cycle. So if you're still holding alts, pray to God you pick the right ones. Maybe I'll do a video on how to pick proper altcoins for next cycle. Hell, maybe even this cycle. Get you into position. Pray to God you're holding some Bitcoin, because guys, we have one more wave left. Just hang in there. Bide your time. It is coming. If you guys enjoyed this video, leave a like. Drop a comment if you guys have learned anything. Drop a comment if you have any questions. I would love to discuss it with you. And as always, make sure to hit that subscribe button. I'm trying to build an audience here to help educate you guys on financial topics, Bitcoin, and share my macro thoughts and ideas. It's been Chris, and I'll catch you guys in the next video.